Focus. Ideate. Innovate. Enable.
Hello and welcome to Making It Big Season 7. I am your host AB Ravi. Well, we all know that the division of Indian state was on linguistic lines. Thus was formed Tamil Nadu for Tamil speaking people, Gujarat for those speaking Gujarati, and so on and so forth. And it seems to me that even businesses, careers or professions in this country are ethnically divided. For instance, South Indians are generally known for their academic pursuit and then picking up secured jobs. Business is a big no. The same can be said of Bengalis and Maharashtrians. But the same is not true for Gujaratis, Marwaris, Kachis or Punjabis. These group of people are more comfortable doing business, big or small, than working for others. Business, it seems, is part of the DNA. The story of this week's episode was about an accomplished Mumbai-based Kachi family. Here the father was a grain trader, but he asked his son to become a lawyer. And this son in turn asked his two sons to become chemical engineer. This is where the business trade came out loud and clear. The elder son, soon after graduating from UDCT, set up his own chemical unit some 40 years ago. Today, Aarti Industries is the leading specialty companies in the country. Most of its products are ranked among the top 5 in the world. Take a look at Aarti Industries' story and you know how to combine Saraswati, the goddess of knowledge, and Lakshmi, the goddess of wealth, to make a mark for yourself.
From minion to whale, in essence, is the story of Aarti Industries. Driven by entrepreneurial energy and quality competitiveness, this Mumbai-based company has grown spectacularly from a small single-product firm into a formidable global player in the specialty chemical space. Aarti's quest to carve out a global niche has made its 16 factories located in Gujarat, Maharashtra, Madhya Pradesh and Silvassa one of the world's largest suppliers for over 125 specialty chemical products. So much so that today the company boasts of a global market share ranging from 25% to 40% in different specialty chemical products, a feat secured and guarded over the past 4 decades. Aarti's products find their way into pharmaceuticals, agrochemicals, polymers, additives, pigments, dyes, aromatics and surfactants. Run by the first-generation technocrats Chandrakant Gogri, Rajendra Gogri, Parimal Desai and Shantilal Shah, Aarti is the only integrated specialty chemicals company globally in its line of products. And this global dominance has helped the company enter into some of the world's toughest markets, like China, which now accounts for about 16% of the company's overall exports. However, Aarti's biggest market continues to be America, contributing 28% and Europe 25%, as these economies have closed down most of their chemical plants owing to environment concerns. Japan is another big market for the company, accounting for about 10% of its exports. This B2B company operates 3 divisions, namely specialty chemicals, pharmaceuticals and home and personal care. But its bread and butter business is specialty chemicals, contributing 82% to the turnover and 90% to the profits. And within specialty chemicals, the biggest money spinner is benzene and its derivatives, which contribute 75% to the specialty chemicals turnover. Carving out a niche in the global specialty chemical space is not an easy task. Rajendra Gogri has accomplished this feat by betting big on R&D and making huge investments. The result? Aarti has been able to offer customized solutions which have attracted global giants like Bayer, BASF, Dow, United Phosphorus, Solvay, Syngenta, Toray, Clariant and DuPont. Little wonder then that 50% of its earnings come from exports.
Aarti Industries has been able to offer us the intermediates and raw materials that we source from them at a very competitive price. In addition to this, as a company which launches a lot of new molecules and new products, we are also able to collaborate with Aarti Industries' strong R&D setup in order to develop these new intermediates and new raw materials. Thirdly, Aarti Industries, as I said earlier, is a company which has got very high levels of commitment to environmental health and safety standard, and this is of paramount importance to a company like BASF. In addition to this, Aarti Industries are also backward integrated all the way to the feedstock, and this gives them the ability to be very reliable whenever they partner and become our supplier.
Aarti's product and innovation leadership have also yielded handsome rewards and uninterrupted dividends to its shareholders. In the past 4 years, between fiscal 2012 and 2016, the company's net profits have jumped by over 129% to 572 crore rupees, while the turnover has grown by 67% to 2,793 crore rupees. The stock market seems to have given the company's scrip a thumbs up, with investors laughing all the way to the bank. The company's old investors will tell you how 1 lakh rupees invested in the company's IPO in 1992 is now worth 1.75 crore rupees. Well, Aarti has indeed come a long way. Today, some of the company's products rank between the 1st and 5th positions globally in terms of market share. But it took over 40 years of hard work, intense focus and dedication for the promoters to achieve this success. Like most companies in India, the beginning was modest. To hark back in time, the seeds were sown by Ramji Gogri, grandfather of Rajendra Gogri. Ramji Bhai, who was trading in food grains from Mumbai's Gulalwadi, decided to educate his son Vallabhji. Not a usual practice among Kachis. Vallabhji Gogri became a lawyer, and he in turn educated his 2 sons. The eldest son Chandrakant did his chemical engineering from UDCT in 1969 and thereafter picked up a job. On his mother's advice, he quit the job and became his own boss. Here, he roped in his friends Parimal Desai and Shantilal Shah to set up Alchemy Labs in 1975. This small firm made dimethyl sulfate from a small shed in Dombivli, located in the outskirts of Mumbai. Soon they set up a plant in Tarapur, Maharashtra and expanded their range of products. Meanwhile, the younger brother Rajendra Gogri, after graduating in chemical engineering from UDCT, went on to pursue his masters from Iowa University, USA. He came back to India in 1983 and joined the family business. Now, the foreign returned Rajendra Gogri's dream was to position Aarti in the same league as BASF or Bayer. But in the license Raj days, there were fetters to growth. So they had to set over 10 small-scale units to achieve some semblance of scale. But these units were difficult to manage. The tide changed after India's liberalization in 1991. Between 1992 and 1995, the Gogri brothers went in for consolidation, launched 5 IPOs and finally merged all the listed entities into 2 listed companies, Aarti Industries and Aarti Drugs. Today, Aarti, with over 3,250 employees, is not only the largest producer of benzene-based derivatives in India, but also the world's lowest cost producer of these derivatives. Besides specialty chemicals, the company is also expanding within its core areas by entering the pharma and home and personal care segments.
We wanted to keep our core competence also in place and wanted to grow. So we looked at the opportunity in the pharmaceutical area and specifically manufacturing of APIs, and then we had to start from the scratch there. So we took a niche area in the sense that high value and low volume products were selected. So with our strength on development and optimization of processes, we have developed several mild surfactants, sunscreen products, and in next 3 to 4 years we'll be launching them in a big way, and in the time to come we also plan to get into formulations and B2C in the surfactant division.
After building a global-scale benzene derivative chain, Aarti is now betting big on a toluene derivative chain by setting up a greenfield facility for 130 crore rupees. This plant is expected to go on stream in FY 2017. On that note, it's time for a short break. When we come back, CNBC TV 18's AB Ravi talks to 70-year-old Chandrakant Gogri and 57-year-old Rajendra Gogri of Aarti Industries about their new business plans. Also joining us on the show will be Sandeep Uppal of HSBC. Stay tuned.
Welcome back. During the license Raj days and in today's liberalized business regime, the Gogri brothers have remained intensely focused on specialty chemicals. They have not got swayed away by peer group pressure. I caught up with Chandrakant Gogri and Rajendra Gogri at the Jagadia plant, which is 2 hours drive away from Baroda, and asked them why have they put all their eggs into one basket. This is what they have to say. Take a look. Raju bhai, Chandrakant bhai and Sandeep, welcome to the show. Chandrakant bhai, if I may begin by asking you, your family was into grain trading, but you got into manufacturing of chemicals. That was 4 decades back. What gave you the confidence to get into manufacturing of chemicals?
Basically, we are a trading community and entrepreneurs. And being a chemical engineer, that was my motto, to make something in India and not go abroad. At that time, everybody was going abroad, and everybody wanted that you should also go abroad. I said, no, I will not go abroad.
Okay.
I will stay in India and earn as much as these Americans people earn there. That was a thing. So that was a challenge that I have taken up.
Okay, now let me get Raju bhai. One thing that comes out loud and clear is that all your businesses are around chemicals. Specialty chemicals, pharmaceuticals and personal home care. You are not gone into non-chemical business. Is it by design?
No, basically it was by design. We wanted to stick to our core competence and our technical background and build a very strong, scalable and sustainable business model. So that was the key thing.
Okay.
And chemical itself is a very, very big, wide field, you know. Like we make chemicals which are used in pharmaceutical, agrochemical, pigments, dyes, aerospace, automobiles, a very wide end-use industry we serve. So we are able to get the opportunities from all that end-use industries. So it's a big ocean, you know. Chemical industry itself is a huge opportunity. So that's why we decided to stick to our core area.
Your money spinner business is benzene, which accounts for 73% of your revenue. Now I understand you're betting big time on toluene. Could you walk us through what kind of investment are you making into this new product and what kind of return it is going to give you in the next 5 years?
Yeah, we are going into toluene because it's a very similar line. The chemistries are very similar to what we do with benzene. And also our end-use customer base is similar on dyes, pigments and agrochemicals. So that was the main logical extension. And we are looking around 175 to 200 crore investment in that line. And about 350 to 400 crore top line in the next 3-4 years once we reach to around 80-90% capacity.
When I look at the last 5 years, you have invested something like 1200 crores and which has given you an incremental revenue of 2000 crores. So what kind of investment pipeline is there over the next 5 years then?
As a philosophy, of the total profit, generally our payout has been around 25-30% as a dividend. And 75% is plowed back for assets and some for working capital. So we are also seeing a lot of opportunity and planning around 1200 to 1500 crore further investment in next 3 to 4 years. And double on bottom line, more than double. In last 4 years we got from 81 to 257 crore as a bottom line, and we target now to more than double on the higher base.
When you compare yourself with China, where does your company have an edge? I believe you are exporting 10% of your total product to China, is it right?
China, the key for ultimately is going to be your cost factor and productivity. So Our products are basically, we operate on a global scale. So like, most of our product range we are top 2 to 5. And also another unique feature is we have a very integrated chain, starting from various whether it's a PNCB or PDCB. And being an integrated chain, so a lot of products we are quite competitive compared to the Chinese players. And China has grown substantially, Chinese economy has grown substantially in last 10 years. So we actually see China as more of a market rather than just a competitor.
Okay, now let me get Sandeep in. Sandeep, here's a company run by technocrats. Very focused. I think it should be a banker's delight. What is your take on this company, having heard the story from both the promoters?
Clearly, you can make out that the DNA of the company is about chemistry and processes which create the manufacturing excellence. And in its first part of the journey, the group has pretty much stuck with the core competence, which has come out with, I won't call it domination, but at least in the top 5 positions in the benzene derivative products. Now, the way I see it is, the company is at the cusp of the second stage of its growth, which is the success which has been attributed to this company on benzene. Can that be taken across to pharmaceuticals and personal/home care? And as Raju Bhai was saying, that if those are successful, then frankly they can take a life of its own. So instead of a one-leg stool, the company or the group could very well become a 3-leg stool.
Okay, Raju Bhai, globally the specialty chemical business is expected to grow at 5.1%. And I see your top line forward looking is nearly 16%. That's 3 times the global average. So what gives you the confidence that you will be the global CAGR?
There are 2-3 factors. The segment, 2 of segment which we are addressing is on engineering polymers and agrochemicals. So in those 2 segments, the global growth rate is going to be around 7 to 9%. And another point we already touched is the de-risking. A lot of customers, they want to buy from us. Right now, maybe China is the only source. So there is from customer side also there is a pull. And second thing is the Indian economy is also growing, and we are also looking at some import substitutes also. So based on all these 3-4 combined factors, we see that more than 15% volume growth is a distinct visibility possible.
Raju, what according to your mantras for success?
One source is that we stuck to our core competence, and another has been a very adaptability. If you see last 30-40 years, a lot of things have changed. There was a pre-1990, as Chandrakant Bhai rightly said, we did a lot of small scale industries for our growth ambition, and once after 1991 the buzzword moved from import substitute to export. So then we looked at the global market and leverage, position ourselves on efficiency wise to be a global player. So from 1990 it has been to build the capacity of the global scale, and now the important thing is more on sustainability. So in last 5-6 years we have been more concentrating on sustainability, on whether it's safety or more and more on energy, environment. So this is you have to be very adaptable to the various external changes and see that, create the opportunity from that, and then build on that opportunity. Another point already has been mentioned is the customer centricity. Ultimately, product chemical which are on specification, unless you have a very strategic and close relation with customers, you are not going to get opportunities.
What is the advice would you give someone who wants to start a business today, a youngster, the do's and don'ts?
So they have to focus on whatever the area they choose, and maybe when they choose the area, it will be good idea if we can have a scalable model, so based on that. Another thing, when they are young, they have to see that, they are really dedicated, committed, and put, a lot of hard work. And one thing which they should always take care of, nowadays, money is easily available. There are a lot of venture capitalists or, banks. So they should use the money very judiciously. Rather than, when sometimes people don't understand difference between liquidity and profitability. You have a lot of money, but whether it is something which may have to pay back in future. So finance is one part, and another thing, you have to be very focused into what you are doing. You cannot be jack of all. It is better to be master of one. Think big but act small.
I think very well put. You're saying don't be jack of all. Thanks a lot, Raju, by being on the show, Chandrakant by being on the show, and Sandeep. Thanks a lot for being on the show. That was Gogri brothers talking about the business strategy and philosophy. These are the mantras the two brothers implemented to build Aarti Industries. Keep the customer at the center of whatever you do. Stick to your core competency. Don't get swayed away by peer group pressure. Take calculated risk from time to time. Shortcuts will not pay you in the long run. Integrity is the key. Well, these mantras have ensured Aarti Industries a well-deserved place under the sun. Before I go, here's an interesting observation by Milton Berle, and I quote him: "If opportunity does not knock, build a door," unquote. Well, on that thinking note, it is time to say goodbye. See you next week with another interesting episode. Till then, keep watching CNBC TV 18.
Focus, ideate, innovate, enable.